Okay, let's get right into the stock market technical analysis. We've got Apple earnings coming out after the bell, and that's obviously the largest, most heavily weighted stock in the S&P 500 and a lot of other broad indices, triple Qs and all that. So that's going to have an impact on the market. We'll go ahead and take a look at that. The Fed is now out of the way, so we're starting to de-risk some of the headline, kind of the headline risk, things just popping up out of nowhere based on events. And the market's likely going to be free to pick a direction here relatively soon. So got to get through Apple, and then we'll kind of reassess. But I'm going to give you guys my read on what I'm seeing in the market as of right now. We'll look through some individual stocks. We'll go ahead and wrap up. All right, so here is the triple Qs, the tech ETF. And as you can see, I know a lot of people have talked about, how bullish this market is, but in general, we have virtually gone nowhere since May 31st. So over a month, we've kind of been stuck in this sideways range here on this daily chart. Had a couple false breakdowns, had a false breakout, and we're still stuck within the range. So we're range bound until otherwise proven. Probably going to be on Apple, or maybe shortly after we'll pick a direction outside of this range. We have negative divergence on the daily chart. So that, again, is indicating it's a confirmed divergence. It's a nice sizable divergence. It's, again, telling me that this bear market rally is over and finished. All right. Now, again, I know a lot of the bulls will say, oh, we're going up, blah, blah, blah. But in general, they're just looking at price, and they'll be bearish or start to panic sell when price is down here. I'm trying to make money on the future move and hopefully able to help everyone with that. So I'm looking to anticipate the move before it actually happens. I don't want to just, when a market is rallying up, say, oh, look, this is bullish, blah, blah, blah. No, I want to say, here's the reason why I believe it to go down, build a technical case, take a position based on that, and hopefully profit and be right on that move. So that's it. I think we're going lower. Potential to break down after Apple earnings. Now let's look at we'll go through some of the things, but let's look at the futures. The futures, I want to narrow it down to the hourly chart here. You can see on the futures, look, there's your sideways range that we were in. Little false breakout right here at the top. The bulls were pounding their chest up here. I was letting everyone know that, hey, at least in the private member group, that we had negative divergence, and this rally, this price action up here was likely going to get sold into. And, sure enough, was completely sold into. From there down, from up here, this divergent high, we're down about 2%. Nothing major, but again, we're just looking at an hourly chart. So that's that. Even yesterday with the Fed price action, too many people get too focused on the here and now and what's right in front of their face. They see a spiky move up after the Fed event, and they say, look, the market's going higher. I have one guy who just constantly, yesterday he was saying, oh, look, the Fed won't let the market go down. It's going to hold. We're going higher. And he literally said that pretty much right in this price action right here. This is when the Fed came out. He said that right there. And sure enough, pretty much from that comment, we're down to almost, almost 2%. And it's just from the comment, basically. So don't get too caught up in intraday moves, especially on Fed days, all right? Now, let's look at further out. Let's look at the daily chart. On the daily, I've got this trend line I'm kind of watching. This is the bear market rally, all right? This is the rally that we've been in pretty much all of 2023. Sucked a lot of bulls in. It's got a lot of people pounding their chests thinking that things are going up to a new bull market. But, I think the chart tells me different. So I've got this rally, I've got some support here, I've got another reaction here, and this is the trend line I'm watching right now, at least on the futures on the daily chart. So you can see where we're at right now. We're still holding that support line. Apple earnings is coming out, so could be bullish. All right, right after the Apple earnings, they might pop it. We could pop back up to these highs. We could even make a new high. I don't think we're going to make a new high, but we could, and pop up. If I had to guess one way or the other, and I am positioned this way, I think the earnings are going to be bearish for whatever reason. Now, I know Apple's going to come out and they're going to say they, are doing buybacks, and the market might initially read into it as a bullish, but I think we're going to gap down. And this is just a micro call, but I could don't put too much weighting into the micro call, because obviously it could be completely wrong. Bigger picture, I have an uptrend line, I have negative divergence. It tells me this upward trend is going to break, whether we go like this and then break, all right, or whether we just gap down and break. Now, again, I've been talking about that trap, that bull trap. And the thing is, the market likes to trap the longs. If this is a bear market rally and we're gonna correct again and go down, continue to go lower, you need to trap these longs. And what I would look at is a gap down, probably below this 1282 area, kind of gapping down and trapping all these longs right here. All right. Over the last month or so, all the Johnny come lately longs, the bulls pounding their chest, foaming at the mouth bullish on the up days, they get trapped into their losses and don't have an opportunity to get their money back. And then ultimately you start to sell down. So that's my guess. All right, now that is just a short-term guess. I think regardless of whether we rally after Apple or not, this trend line should break sooner rather than later. All right, that's my read on that. Let's move on. We can look at the FANGs. Again, the FANGs are pretty much just holding out for Apple earnings. Amazon, you had a little uptrend line. You did break. You're still kind of hanging in there. Google, and these are daily charts. Google, again, here's this little trend line. If I roll out, you can see there's several reactions, kind of a major trend line there. It shows even cleaner on GOOGL. This is like the bull market trend line in Google going all the way back to 2008. All right, lots of reactions. This is COVID, so we kind of throw that out, but here we are. And as you zoom in, just kind of below, and we're just treading water right there. So at resistance, you can see that was former support right there. It was resistance here, little pop over it, but in general, key level of reaction and should be resistance. So, and then Microsoft is backtesting its major trend line. Look at that. This is going back to 2016. Support, 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 and right there at resistance. So again, I'm thinking we get that gap down. All right. Gold. So here's gold bullion, and I haven't talked about it. I haven't had the best read on it recently. Gold, triple top right now. You've got the highs. This is back in 2020, which you put in a high around 2070 or so. There's another high right in there, and you can see they spiked it into that kind of that top today. Rejected on the initial reaction, so that's it. It's resistance until proven otherwise. Now you break out, and yeah, maybe it wants to run. We do have that, today's high was a divergent high. You can see there's some negative divergence on the daily chart. So maybe it's not ready to break out yet. It's at resistance, so I'm still not super clean on it. But the miners the other day, and in the live session on Saturday, I did point out that they were at support. Here's GDX. It was at support, and I said, look, if I had to guess, this is where you buy it at, and so far they have. So that's that. We'll continue to watch that. I don't really see negative divergence on the daily chart on the miners. So yeah, I'm not necessarily bearish on these things. Guys, if you're new or you haven't taken my course yet, I put that course together. It's multiple videos broken out into key concepts. Link in the description below. I priced it affordable. It's not free. My time's not free, essentially, but it's affordable and it's not obscenely expensive, okay? So I think there's definitely value there. Again, check it out. Link in the description below. And then if you're interested in getting additional market insights, additional trade ideas, I have a private member group. It's $5 a month right here on Google. Link in the description of this video. You should be able to join that group if you're interested and check it out. All right. Okay, let's look at wheat. So wheat obviously has been a long trade idea on this channel for a little while. We've haven't been a little early on it, but I still have continued to stay bullish and consistent with how I think the chart's how it's going to trade. All right. So look, you have a big bullish falling wedge. All right. Wheat basically is coming. It's in a bull market. Okay. If I roll out to the weekly chart, you can see here. All right, wheat was in a bear market since 2008, put in a nice rounding bottom, spike up, correction, and I think the next leg higher in an ongoing bull market is about to resume. Now, if I look at the weekly chart, there's something to learn from this one. The bullish falling wedge is present there on the weekly chart, and you can see as I zoom in, intra-week, they dipped this thing down below the bullish falling wedge. That's called the stop rate. But where are we at, near the end of the week? Right back within the wedge. So I suspect we're going to close within the wedge, if not higher than where we're at right now. Still remaining within that bullish falling wedge. And that's bullish in general. Now, if I look at the daily chart, there it is. So again, I did have a few people say they had to stop out because we broke down out of the wedge. And that's fine. I understand that, we did break down out of the wedge, and it was a breakdown, but we had a bullish divergence on the daily chart. There it is, boom. And that's the thing I talk about. When you have breakdowns, when you have divergence in play, they're higher probability, most likely a false breakdown. It's the same thing for breakouts with negative divergence. Breakouts with negative divergence likely are going to fail. And so, that's it. Breakdown with bullish divergence. Okay, sorry, I had to take a call. Anyways, so we're back within on the daily chart, bullish falling wedge. We're back within the wedge now. So false breakdown right there. The divergences kind of cued me in that it was likely going to be a false breakdown, and sure enough, there we are. So I'm thinking we probably head up to the top, maybe get a brief little pullback, but ultimately with this fall, usually when you have a false breakdown, and it ends up kind of showing itself, you're usually going to run up and start to break out. So that's what I'm looking for. Continue to stay long on that one. Okay, FSLY. So obviously I covered my short trade yesterday. There was, we got earnings. Earnings came out bad. That's a breakdown of that next support level. Unfortunately, I'm not in the trade, but that's just the nature of it. We had earnings risk. Earnings was coming out. The market didn't like what earnings said, and we're selling down. So technically, the short trade was forecasted back here when we had that sell signal. So if you're still in it and you held on to it, and you took the gamble, then, obviously that paid off. I was happy with taking my profit ahead of earnings because, again, it could have gone the other way, and nobody knows exactly which way it was going to go. We were also at support right here. So, it was just too high of risk for me at support right ahead of earnings. It just didn't make sense. So, but there's that, down 11%. And that's been a winning trade for for us and anyone that's still in it. So semiconductors. So again, we're continuing to trend lower. I re-shorted the thing. Again, if anybody's been with me on this trade, shorted it kind of up here at the high and the breakdown, shorted it here or covered it on this tag of support, rallied it up, re-shorted it right here, and I remained short. All right, I'm not going to cover the trade now. We're back down. Support is about 398-ish. We're back at, I think we're going to break, all right, and continue lower. So not looking to cover my short trade on this one. NVIDIA, semiconductors. Again, we've really gone nowhere. One false breakout right here, right ahead of the Fed and all these major earnings. So didn't look very believable to me. We had this bearish rising wedge. We have negative divergence. We've broken, have gone sideways. I know the bulls, a lot of the kind of dumb money, basically, they won't realize they're wrong until they're just taking on losses and they've lost money. But I am looking to be positioned ahead of that. So not a profitable trade for me yet. Got in a little early. I agree on that one, but doesn't mean it's a losing trade yet. All right. Again, just because you get into a trade and you don't, you go under in the trade a little bit briefly, does not mean that it's a losing trade. So I'm still in it. I like the technical setup. It's still there. There's no reason to cover the short because we still have technicals telling us that this is going lower. So that's it on that one. And then these financials are starting to show some red flags. They're kind of taking a beating today. JP Morgan down 1%, Wells Fargo down 5%. Just looking across the board on some of these large cap banks, and there's obviously issues. And that's kind of what's in the headlines right now. We're seeing some issues with the banks. Here's JP Morgan. Again, JP Morgan gapped up on earnings, and then this is the move after they bought that bank. They gapped up here. I didn't understand why they were up on buying a failed bank, but, nothing but selling sense. So kind of at support right now. Not enough in here for me to really take a trade on it, but we do have negative divergence that is still intact. And even short term, if I go down to the hourly, you can see the negative divergence on that one as well. There it is, right here. All right. So that little pop up was a divergent high that got sold into. So yeah, I think there's probably some lower prices here in JP Morgan. Trade idea win. Again, this is a gambling stock, likely showing the conditions of the consumer. This is, disposable money. People only go out and gamble if they're not afraid of their job being lost and they have disposable money. So we'll see how this plays out, but clear negative divergence on the daily chart. It's been building. It's pretty well defined. You had a clear uptrend here, and then ultimately you broke trend. And since you broke trend, you did a back test, and you've gone virtually nowhere. All right, sideways. So this to me looks like a topping pattern. All right, the sell signal on this one is likely going to come on a break of, probably right in here. I think this is likely going to be the support level at about 104-ish. A break of that, impulsive break of that's probably going to be your sell signal and set us up for a move down. We also have earnings coming up here next week, so we'll see. Okay, I'm going to go ahead and wrap up Apple earnings after the bell. I didn't even cover Apple. Let me go through that real quick. Apple, this is a big thing for me, and obviously it's right ahead of earnings, so it could go still not definitive, but this is the bear market rally, all right? So here's the bear market in Apple. It's been in place since basically January of 2022. There's the trend line. Every single time you hit the trend line, it's been rejected for the next leg lower in the bear market. Now, I know a lot of people, I think this is deceiving to the bulls, thinking that, because that Apple is not in a bear market, but it is. We're making lower highs and lower lows, all right? And recently, here's the recent high here. Now, we did break above this trend line just briefly, right ahead of the Fed and right ahead of Apple earnings. All right, false breakout most likely, and it's proven so far today to kind of be that. Now, earnings could kind of change that. We'll kind of keep an eye on this. We also have this bearish rising wedge here, and we have broken down out of the wedge. There's a breakdown. That is a sell signal. Okay, you broke the wedge. You have negative divergence on the daily, and also you have broken back into the range of this downtrend line right there in blue. Okay, so technically that is a sell signal. You can see they rallied it up, but we're basically right there at that resistance. Now earnings, I don't know. It could go either way. I have a feeling it's going to gap down, all right? But it's so hard to say what the initial reaction will be. Maybe it wants to do a back test and chop around a little bit more before rolling over. Maybe we're gonna hold up for another week or so. But I have a feeling that it's going to gap down. The point is the divergences, the negative divergence, and the fact that we've broken back down into this bear market range, we're just at resistance now, tells me something. Now, is this a break? You're going to hold support and then rally? Maybe. But the divergences tell me that if it rallies, it's going to get sold into because, look, if you rally and make a new high like that, maybe right after earnings pop up and make a new high, it's going to be a divergent high, which will likely get sold into. The probability says any new divergent high gets sold into until there's no divergence. So that is it on Apple. And it's been deceiving for people because Apple's so heavily weighted in the SPY, in the triple Qs, that this bear market, we're not too far off the all-time highs, even though the trend is lower and lower and lower. We're at the peak of what seems to be the end of the bear market rally, which puts us just up, recently we were only 6% off the all-time highs. Right now, we're about 9% off the all-time highs. But people just look at price, they look at their portfolios, they see that where the value's at, and they say, hey, I'm only this far off. If you owned Apple, I'm only 10% down from the all-time high. I'm not, I'm barely down, or I'm still profitable from all my positions I've been buying for, many years. And so they don't feel like there's a bear market based on what their portfolio value says. But the technicals show me a downtrend. Believe me, those same people that don't feel that bearish right now because of where the price is at, if I'm right about this being a bear market rally and we're going to roll over and make new lows, they'll come out and they'll look at their value down here and they'll be bearish. All right, they'll say, oh, I don't have any money, I lost a lot, and things like that in Apple, and they'll be bearish. Doesn't do you much good though after the fact. So that's what this channel is about, guys. Hopefully you're finding value. I'm going to get the video out. Catch you on the next one.